All right, everyone. We're going to get to Ernie in the chat looking at IWM. So, IWM, we are down pre-market. We did get above the volume profile using this area as a support here. So I see support at 181.98. This does look bullish to me in the time being. It would have to break below this 179.08 for it to look like a tasty short. But in the meantime, this one should be holding support, IWM. And I know it's down. I know it's down pre-market, but I'm looking for it to use this area as, again, a nice support. I'm leaning a little bullish today, everyone. So I kind of stuck with some stocks that would go with that theme. Sybil is looking at GSK. No idea what GSK does, but very strong looking chart. We broke above the point of control, use that as support, and we have a beautiful thin zone to the upside if this thing really takes off. Positive earnings. There's plenty to support that this one should continue to go higher. Really nice chart here. And Noam Frank is looking at Boyle. Boyle, again, use the point of control and it was a local low as a support here. But what helped is that garnered a nice area of support with our point of control, which we are starting to break out. I have an upside target of 51 in Boyle, and that's the Bloomberg Natural Gas Ultra natural gas. We have Mark Sebastian here to take a look at these charts. Mark, I don't know if you see any big money flow in any of these names or if they look interesting for a trade. We have IWM, GSK, and Boyle, and I'm all bullish on them. And so along with the chart, what do you see, Mark?
I'm already long GlaxoSmithKline in Profit Revolution. That's what GSK is, Glaxo. When it looks at, I'm not a big let's trade long-term hold levered ETFs, but I like your play on Boyle and on energy, which is going to bring us. Take a look at Energy Transfer for me. Let's go that direction because it's a nat gas play that I think can play. I think it's starting to set up for a long. What do you think?
Absolutely. Look at this thing. I mean, we broke out. We're using the point of control as support. Upside target 1264 at least in ET.
Yeah, 1264 is a nice level. I like that. Let's go somewhat short dated. How about we buy the December 9th 12.5 calls for 20 cents? That thing makes a run at 1264. Those will double in price.
Awesome. All right, Mark, that was a quickie. Can you say it one more time for our beautiful
we're
members
looking at the ET December 9th. All right, so not this Friday, but so 3 Fridays from now, the December 9th, 12.5 calls in ET. That's Echo Tango. December 9th, 12.5 calls for 20 cents.
All right, Echo Tango. Well, Mark, speaking of nine.
Excuse me. I should have said Echo Tango. I forgot to shake my shoulders when I said Echo Tango.
I know. Well, let's dance. Dun, dun, dun. Is this the tango? I think so. When you go like this.
I think you've got it. Yes. Yes.
All right. Well, I'm forward looking into the VIX forecast that you have for the week. So, Mark, what are you seeing in volatility?
Yeah, we continue to see the VIX in a contango, and the volatility index. Did I just do something? I didn't, right? No. Okay, good.
You're good.
All right.
We didn't see it.
All right, good. I was worried there for a second. The volatility index continues to kind of mill about in this 22 to 23 range, maybe touching 24. People ask me, Mark, why can't the VIX get off the mat? And I pointed this out on Tuesday when we had that missile hit in Poland. That is where an unknown can take place, and you can see volatility make a real move. If we'd gotten follow through from there, the VIX going from 23 to 20 to almost 27, we would have seen it gone to 35, maybe 40 if things had really progressed from there. They didn't, and things calm back down. So we're back to a bunch of known knowns. So what we have is a VIX curve that's in contango. However, we do have a structure where near the curve itself is relatively tight against the cash index. Now, why is that happening? The reason being is that the VIX futures have already priced in the holidays, and the cash index has not. It's going to start pricing in the day and a half off and the weekend for Thanksgiving here in the next day or two if markets don't fall apart, and you're going to see that spread start to widen out. The other thing I'd point out is that there is just a giant spread between December and January. And so something's got to give. If I was looking to short vol using VIX options, I'd be using January, not December. That seems to be where there's real money to be made, because the spread between December and the cash index is only about 1.4. That's relatively tight. It should be about 2. But the spread between Jan and the cash index is 3.5 points, which means Jan's about a point too expensive. Either December is 50 cents too cheap, or in January is 50 cents too expensive, or January is just straight up 50 cents to a dollar too expensive. So the curve is pointing toward calmer markets, the market maybe not being that wild, but it is also telling us that they don't trust it. That's why the curve is set up the way it is, and why you need to be kind of continue to tread lightly. I still like owning premium here. The spread between where VIX is and how much the S&P has actually been moving is really wide. Realized volatility is trading at a huge premium to where VIX and volatility are. Now, it's got a 200-point move from last week. It's still in there. When that comes off, it'll get a little tighter, but our daily range has been so high, it has not been difficult to be a long premium holder in this market and to make some money. So I still am running a yellow light, despite the fact that most of my metrics say red, and that is because that realized vol component of the S&P 500 does not seem to be backing off.